ETFs for beginners. All right, so an ETF is basically a small portfolio of stocks that you buy. The common metaphor that is really used for ETF is a basket of assets, and it's literally what it sounds like. So when you own an ETF, you own a portion of all the assets that the ETF holds, and it's kind of indirect ownership over these assets. And how are these assets chosen to be put into the ETF? Well, one of the benefits of the ETF is that they track an index, and so the assets that are put into the ETF are taken from the underlying index that they follow. For example, the SPY ETF follows the S&P 500 index, and so all the assets in the SPY have a direct correlation to what the S&P 500 index is following. The benefit of this is that there's not a human person managing the fund, and so because of that, you don't have to pay that person, and there are less fees involved with owning the ETF. You're also investing in an index assets rather than a person's choosing of an assets. So you're following just what the market is separated by rather than how a person chooses it. Now I'm going to go into 3 reasons why these are really great for beginners. They are a popular choice for many reasons additional to this, but we're just going to go over some of the basic reasons behind this. So why are they good for beginners? Well, they're great for beginners because 1, you own a portion of all the assets, and sometimes the price of the individual holdings, the shares in the ETF are just too expensive to purchase. So for example, in the XAR Defense ETF, there is Lockheed Martin. Lockheed Martin is a $271 stock, but XAR ETF only costs $69. So of course you own only a little portion of Lockheed Martin, but you get to be indirectly the owner of their assets and also receive a portion of the dividends they pay out. Okay, on to number 2. There are extremely low fees. So because the ETF tracks an index and is not managed by a person who has to be paid, there are lower fees than having a mutual fund. And a mutual fund is also a fund which is a basket of assets. So lower fees are really important for beginners just because the fee is usually going to be a percentage of your money. So, spending $5 with a portfolio with $1,000 is 0.5%. So you're trading that away each time you trade. And so if you earn a 10% return, just the fees for entering and exit is going to take 1% off of that with a $1,000 portfolio. Okay, on to number 3. There's liquidity with ETFs, and they're bought and sold throughout the day. There's usually higher liquidity because of this. And so as an individual investor, having liquid positions is really important, especially if you get scared and you want to sell, or you want to take your profits and sell it, or you want to buy more. So these are just the 3 basic reasons why ETFs are really popular. There are advanced ones too, which is for another video, but learn about ETFs, see if you want to invest in them, because they might be a better investment, especially if you want to diversify, because you can diversify your portfolio into another sector just by buying an ETF in a different sector. And also just the flat rate fee is the same usually as buying stock. So it is a attractive purchase, and I really recommend them, and I'm going to be looking at investing in an ETF myself. I'll probably have a video on that. But that was the video. If you liked it, make sure you hit the thumbs up button and also subscribe, because I post early in the morning when the stock market opens, or even when the stock market closes. And also this Saturday, I'm going to be doing a portfolio video of my current portfolio, so look out for that. And also Sunday, I'm going to be doing a stock analysis on Apple, the big boy, because their earnings are coming up. So I wanted to do analysis on Apple, and so make sure you look out for that.